Welcome back to Growing Your Savings Using Blue Chip Stocks. Today is November 21st. Prices were updated on Friday. November is following October as a very good month for the markets. We're going to check in with our listing of Canadian stocks on the TSX and our US stocks on the New York Stock Exchange on the NASDAQ, as well as my 4 fantasy TSX portfolios to see how they're doing. Our $5,000 portfolio is still at 0%, the break-even point on the year, which is the same as last week. Our $10,000 portfolio is up to 7%, rising from 5% last week. Our $25,000 portfolio is showing a 3% gain, which is up from 1% last week. And our $100,000 portfolio, which closely reflects the TSX as a whole due to the variety of stocks in the portfolio, is down 1% since the beginning of the year, which is a rise from 3% last week. If you remember, at one point it was down almost 10%. So the $10,000 and the $25,000 portfolio are definitely beating your basic 1 to 2% that a GIC pays. Things seem to be turning the corner as we near the end of the year. Soon we're going to reinvest those dividends that have been increasing over the year. And remember, you're in this to grow your savings, and your stocks are paying dividends. Blue chip stocks are a slow and steady growth. You aren't going to get rich overnight, but the earlier you start investing, the more you will gain in the long run. And we'll also take a look at how each portfolio shows the dividend payout so you can see how the stock market pays you. Things to remember, as always, the prices on the stock market will go up and down with the economy and world events. With blue chip stocks, the dividends are fairly secure. They will pay out at the same rate no matter the value of the stock. Dividends can be used to buy more stock, and dividing your money evenly into each of the 5 sectors shown will create a stable portfolio. When one commodity goes down, the others tend to go up. So when the market takes a tumble, and even though it is going up right now, eventually at some point it might take a small tumble. We'll cross our fingers that it's just a small tumble. That's when you want to buy. So either add cash or reinvest your dividends. And as a reminder, this is for information purposes only, and I take no responsibility for any gains or losses you experience in the market. So taking a look at our Canadian portfolio, our manufacturing and industry has actually climbed to a 1% gain on average. Consumer goods and services have climbed up quite a bit since the middle of the year. We're averaging a 4% loss, but look at the gains we've got in Saputo, Restaurant Brands, Molson Coors, Metro, and Loblaw, all double-digit gains. Finance, of course, is still showing a loss, but I think at one point in the middle of the year it was down 36%, so it's starting to climb back up. Resources and commodities still showing a great gain of 32%, and we have Suncor has raised their dividend this week. Utilities, sort of half and half. We've got some small gains with TC Energy, Enbridge, and Canadian Utilities, so we've got an average 4% loss on utilities, but all the Canadian stocks that we're watching are averaging only a 1% loss at this time. So taking a look at the US side, manufacturing and industry in the US has come up just a little bit. We're at minus 13%. We still have more depressed stocks than we have gains, but take a look at Genuine Parts is up 32% on the year, and it's up $180 from $177 last week. Taking a look back at September, it was $157. So this has made some good gains in the end of the year. Consumer goods and services in the US, that's climbed up quite a bit. We're only showing a 4% loss at the moment. It looks like we have more green, so more gains than we do losses. McKesson is showing a 46% gain on the year, but that's kind of offset by Gannett, which is showing a 61% loss. Finance in the US is still showing minus 21%, so that is reflecting the market as a whole. Resources and commodities in the US are down 12%, offset by a 13% gain in Chevron. We've got Alcoa and Newmont are taking almost a quarter, 25% losses there. Utilities down 17%. That has kind of gone down over the year. It began strong at the beginning of the year and it has come down. However, as the market turns around, these will also come back up. So our overall US is down 12%. So let's take a look at the fantasy portfolios on the Toronto Stock Exchange. Our $5,000 portfolio is sitting at $5,056, which is down $18 from last week, and it's down $27 overall. If you go back to the beginning of October, our portfolio was down $645 overall. So we're starting to come back here. At least we are, you can see it says 0%, but it is on the green side, so it is up a little bit. Dividend income has increased in the $5,000 portfolio. We're now sitting at $210.16 annual payout for this portfolio. So our $100,000 portfolio, this is looking great. This is up 7% on the year. We're sitting at $10,735, which is up $144 from last week and $899 overall. Dividend income for the $10,000 portfolio, we are now up to $391.74. That's the annual payout. We began the year at $336. So you can see how your portfolio pays you. That is cash that is going to go into the portfolio. A $25,000 portfolio, we're showing a 3% gain. We are sitting at $25,021. Up $13 from last week and up $162 overall. Compare that to the beginning of October where we were down $1,200. So we got some strong gains in this portfolio. Dividend income in this portfolio is still sitting at $764.60, still up from October, and also a big gain from the beginning of the year when the portfolio paid $699.28. So $75 almost gained over the year on that portfolio. So our $100,000 portfolio, we are up, or we were up to a -1%. At one point, I believe we were at -10%. So it is coming close to the break-even point. We're sitting at $94,998, which is a $41 increase from last week. But still down $3,500 on the year. Let's watch and see if that will increase. Our dividend income for the $100,000 portfolio is now up to $2,652.36. That's up about $23 from last month, and $300 from the beginning of the year when we were paying out $2,300. So things are looking good. Let's watch the market this week and see what happened. If you want to take a look at the one particular stock, Home Capital Group has actually doubled in the past week. There is a takeover offer on the table and the stock jumped from about $24 up to $42 today. So go online, take a look at that. That's some amazing money that was made there for anybody that got into Home Capital Group. Anyway, I will fill out my spreadsheets next week. Let's see how we gain, and I will talk to you next Monday.